The stock market is in a constant state of economic acceleration and hardship in recovery. These are cyclical events. With central planning and state intervention, the intention is to create a more predictable, ever-expanding market, sort of like having one season in the weather. The issue is that central planning always fails, distorts the markets, and favors one group over another. You came here for the truth, so let me unveil that for you. Today we are going to look at this one particular indicator, and then I want to connect that in with a few other points. Let's begin with this. Robert Shiller, most people know him by now. The Nobel Prize winning economist Robert Shiller believes investors should continue to own stocks because the bull market may continue for years. This article is from May of 2017. All right. And essentially what his reasoning behind that was that it can still go higher and higher. Look at what happened in the year 2000 where the valuations were all off, yet it just continued. All right. So that's May 2017. Fast forwarding to present time as of this recording, Robert Shiller urges caution on the market. We're at a high level and it's concerning. So he's finally starting to come around, perhaps. We'll see. Market valuations are at unusual highs. And the only times that they've been higher is 1929 and the year 2000. And what we're talking about here is the CAPE, or the cyclically adjusted price earnings ratio. So this is one of the more famous indicators that are out there to determine are stocks overvalued or undervalued. Historically, the number is about 17. And right now we are at about, let's check it out in this chart, 30. So this number continues to get higher and higher and higher. And you can see for yourself that essentially the only time it's really been higher is the tech boom and bust. And even in 1929, look, we're basically at the same point right now. If it continues on this trajectory, it's not going to take long. What we need to understand is that, yes, it's only one indicator, and we could form permanently new highs. But just take a look at this. I mean, we're talking about over 100 years of data, and we can see that things have really changed. Now, surely, with enough money printing and everything else, you can get these to be pumped up, but it doesn't last forever. It really doesn't. The further you push it up, the harder it will fall back down. That is a fact. It's the way it is. The CBO, the Congressional Budget Office, income taxes are up 9.5% next year, but debt climbs more than $1 trillion. The amount of debt that is out there on every single level is absolutely astonishing. It's record-breaking, and there's no way that it is sustainable. It can't be paid back. And many people would argue that who exactly are you paying back? Well, you don't understand that governments do not do anything with the monetary system, or at least to some degree. We're looking at the central banks, and the central banks loan money to the government at interest. So when you say that we owe it to ourselves, you don't understand. These are essentially private banks loaning it to the government. That's the way it works. We don't owe it to ourselves. That's really a false claim. Let's move on right here. One more note. One of the main reasons Congress is getting so little done is because they will have 218 days off in 2017. Look at this right here. Practically the whole year they're on vacation. I'm sure everybody working a 9-to-5 job is hoping that their schedule looks a lot like this. I mean, it's crazy, to say the least. You have those in Congress always have to vote on these particular laws, which are thousands of pages in length. They have to read through it a lot of times in a 24-hour period or less. They're not reading it. And ultimately, they sign it anyway. That's just the way it is. It's really just the way it is. And it is truly sad to see that, because these are the people that are making the laws. They have the power of the purse. They are able to decide what happens. I mean, truly, they have more power than governments. And it doesn't, I should say, presidents or prime ministers, but it seems like the Congress or parliaments are taking sort of a back seat to laws that are being made these days. And it is something that really is terrible for liberties. There's no doubt about that. If you found this video informative, please give me a thumbs up. And if you found the video informative, I know you'll find my books, The Money GPS, and my latest release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. They have a look inside feature, so you can actually flip through the pages of the book to see if you like them. If you want to know what the first book is about, it's the 4 asset classes and how to profit from them. Whereas the new book takes on familiar concepts, but then I get into the Money GPS strategy of tax incentives, reducing your debt, becoming self-sufficient, solar panels, all that good stuff. So you can check that out at themoneygps.com or Amazon. Take care.